Hey, everybody. I've been asked a few times about my current opinion on Boston Omaha Corporation, which is one of my largest investments. Ever since they put out their fourth quarter earnings report, I've shared a few thoughts on Twitter, or X, whatever you want to call it these days. But I want to dive into the numbers a little more closely and give my thoughts. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. You can get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work I'm doing on YouTube. So again, that link is fool.com/Frankel. So if I had to sum up Boston Omaha's 2023 year-end results in one sentence, it would probably be that they had very solid results, but there are a few big lingering question marks in my mind. So, and I can see why the stock is not doing that well. So let me share my screen real quick, and then we'll talk about the numbers. Okay. So if you look at the numbers just from this page, it looks like the business is doing pretty solid. So billboard rental income was up significantly year over year. Broadband income rose significantly. In the insurance business, they got less commissions, but their premium income that they're earning is significantly higher. Remember, they have a surety insurance business. Investment income's higher. A lot of that has to do with interest rates being higher. Just the cash they have is earning money. But all in all, overall revenue grew by about 19% year over year, 18.5% to be more precise. So that's pretty solid. It wasn't a terribly big acquisition year for Boston Omaha. In the past, they acquired a giant broadband business, so it made the numbers look a little better than they were. It wasn't a giant acquisition year, so a lot of that is actual revenue growth. If you look at the bottom line, where it's the net loss of the business, you see a $7 million net loss. That is somewhat deceptive. If you look a couple lines ahead, you'll see a depreciation and amortization expense of $19.6 million. Now, depreciation is something you get when you have real estate or a lot of physical assets like that, like broadband infrastructure counts, billboards count. Those depreciate over time. It's not actually an expense. So if you back out that expense, you see the business is actually pretty profitable. They're not losing money. Um, it's doing pretty well overall. Down here, you can see they have about $71.3 million of cash and investments on the balance sheet. That does not include the Sky Harbor stake. That's just cash and money they could potentially spend, essentially. So the company's doing a decent job of growing its book value. It currently has a book value of $17.19 per share. This is a rare point in time when it trades for a discount to its book value. And it's difficult to use that book value number. The book value is actually probably low. The intrinsic value of this business is probably significantly more. Um, I saw a great sum of the parts valuation on X the other day. I've done my own. I get about $23 per share in valuation on a conservative case. I can see with a more aggressive valuation, it being significantly higher, but using a conservative case, it's still significantly more than the company's valued at today. The Sky Harbor investment is doing very well lately. Boston Omaha owns a big piece of that and a lot of warrants. So I'm happy about that part of the business. But one other thing that I'm not thrilled about is during the quarter, let me share a different screen. They kind of threw a curveball. They announced that the Boston Omaha asset management business, which was just recently separated into the fourth segment of the business, is going to be wound down. They just made Boston Omaha Asset Management a separate part of the business. There was a big rationale behind doing so, that it would be easier to hold things like the Sky Harbor stake and to manage money out for third party clients, which was a big part of the investment thesis and was kind of management's maybe with the exception of broadband infrastructure, was management's biggest focal point of the past few years. Um, this is a big deal. For me, it's not quite a thesis buster, but I want to know what happened. I'd like to know why they're winding that down. It doesn't really give that much great information here. It just says that the environment's not great, essentially. If you look at the second paragraph, it says, we have determined that the high costs and significant risks associated with fund financing based on current market conditions leads us to conclude that it would be more appropriate to pursue self-funding, bank debt, or other funding options for our fiber business at this time. So my thought to that sentence is okay, but if the environment's not great right now, because it says based on current market conditions, why not self-fund for the moment and keep the asset management business alive until market conditions are better? What's the harm in doing that and just kind of operating it on a small crew right now? Um, so I have questions about that. And as I've said before, perhaps my biggest complaint with Boston Omaha from an investor standpoint is the lack of communication. You can't throw a curveball like that and just kind of leave investors in the dark. You can't have and it's not all about the stock price. They're delivering on a lot of aspects of the business. You can't have your stock price go through a 50% drawdown and give complete radio silence to your shareholders who have supported you throughout this whole time. Not everybody is a certified financial planner or an experienced investor that knows how to analyze stocks and can really read behind the lines. You really have to communicate with your investors. Even the notoriously camera shy managers, when market conditions are bad or there's a big change in the business, they'll say something, offer even just some encouraging words. Pretty much Boston Omaha's management gives us radio silence except for a once a year meeting, which is going to be virtual this year, by the way, and a once a year shareholder letter, which is not out yet, to explain what's going on with the annual earnings that I just talked about. So, in my opinion, that level of communication is unacceptable, especially in a time when your investors are hurting and they're worried. Again, it's a long-term play. It's not all about the stock price. I totally get that. I haven't sold any of my shares. I don't plan to, but I would love to see them improve communication. That would be my constructive criticism to the management. Um, and I feel like they know that it needs to improve. They just don't really know what it's going to look like yet. So that's one thing that I will be asking them about if I'm called on in the shareholder meeting. Is kind of their communication, because I'm sure there will be millions of questions about the wind down of asset management, and the management will address that at some point. So that's kind of my take. I plan on doing another, probably a more informative video, if I'm being honest, when the company puts out its annual letter, which I would expect in the next couple of weeks. Their annual meeting of shareholders is on May 1st, and I'm hopeful that the annual letter will be out before that time, because it would answer a lot of questions that would probably otherwise be asked at the meeting. So until then, thank you for watching. Please leave me your comments if you think I'm being too harsh on Boston Omaha's management. I'd love to have a dialogue about that. Leave me any comments you want. I will do my best to answer each of them individually. Thanks for watching.